QCLS is back on the radar as renewed excitement around photonics and optical computing collides with a very modern catalyst, Martin Shkreli taking a position and publicly setting an aggressive price target. Whether people love him or hate him, his involvement reliably pulls eyeballs, and in this case, traders are dissecting every comment he makes, treating it like fuel for the narrative around a potential major run. A big part of the hype comes from the broader resurgence of interest in photonic and optical-based computation, which is being framed as the next leap forward beyond classical and even some quantum architectures. QCLS's lane in quantum class photonic processing has suddenly shifted from niche to spotlight territory, especially with reports that QC Technologies recently secured approval for a crucial patent tied to their quantum computing framework. Bulls see this as validation that the company's tech isn't just theoretical, it's intellectual property backed and potentially commercially relevant. Across social platforms, traders are comparing QCLS to recent explosive runners. SMX, BTCC, and even older cult favorites are being used as benchmarks for what a low float, heavily discussed name can do when sentiment reaches a boiling point. The conversation has naturally expanded into short squeeze theory, with many pointing to unusual borrow dynamics, thin liquidity, and the way momentum can snowball in these setups once volume kicks in. Another factor feeding the fire, PMCB's sizable stake in QCLS, which is amplifying speculation about cross-company synergy, shared tech pipelines, or broader strategic alignment. Some traders see this as a stamp of internal confidence. Others view it as a double-edged sword, depending on how PMCB's own moves develop. Right now, the community vibe swings between this could be the next big photonics run and this is shaping up to be another ultra-volatile, sentiment-driven roller coaster. Many are watching for a breakout confirmation, pointing to technical levels and highlighting how names like SMX exploded once they broke through key resistance with high retail attention. Meanwhile, skeptics warn that enthusiasm doesn't erase risk, especially in sectors prone to dilution and hype cycles. But one thing's clear. QCLS has the market's attention, and all eyes are glued to news flow, volume spikes, and whether momentum can convert into a legitimate breakout.
Okay, so the stock is up 7.23%. High borrow 100%. Yeah, borrow the fees are not so much, okay. Intraday high in this pre-market session 9.38. This is on top of what it gained yesterday, gained 48.18% yesterday. Okay, so as things stand right now on this 4-hour chart, you can clearly see here that it has pulled back from the highs of around 9.38. Is that what we have here? Yeah, it's pulled back from here, from the highs, intraday high. Okay, so the extrapolation is saying that it might continue to pull back and maybe attempt to bounce again from Tuesday the 11th. Okay, so this extrapolation is saying that the pullback will continue all the way towards the 11th. Okay, and the 40-period moving average on this 4-hour chart is equally rising to catch any attempt to pull back. Okay, no guarantee that all of this will turn out to be like that. Projections are not saying anything to the upside, but we have them already. We have 9.38. That's an upper projection. Okay, previous upper projections, I think they may have printed here. Okay, well, we can just quickly glance at its 4-hour, daily chart to see what we have. Okay, the stock is showing a lot of strength within a longer term bullish bearish trend. Its 200-day moving average sloping bearishly lower. Okay, so the algos got this one right. They're saying that it was going to continue to print higher prices up till the 9th, up to Tuesday the 9th. Okay, yeah, okay, and then after that we might begin to see a decline, and yeah, the algos are saying that momentum will continue to decline and ebb off all the way towards the 19th of December, and we are not going to see anything like the sort of momentum we have seen of late, but it may build up, may build up in the coming months beyond January. But never say never. This is a high borrow rate stock. A lot of things can happen between now and then. So we have been able to break down what's going on with the stock. Okay, yeah, everything is, the stock is accelerating based on its 4-hour chart, extreme trend mode on its 10-day moving average, strong trend mode on its 40 period moving average, trend mode on its 40 period moving average, and trend mode as well on its 200-day moving average. All short-term price pressure momentums are in extreme trend mode with high second derivatives indicating acceleration. However, this degree of extension typically precedes mean reversion, so a pullback is something that can happen. So a breakdown of its market grid. Okay, market grid gives you a range of prices within which it has the ability or potential to trade. Okay, so we have 8.51, intraday high is 9.38, so okay, 8.51, 35% probability. Okay, immediate sit-in, tested intraday, yeah, tested already. Yeah, okay, so it's at 7.34 now. Okay, 8.90, 20% probability, requires renewed buying pressure. 9.3, okay, 10%, it has actually printed 9.3 as a matter of fact. Yeah, all of these have been tested apart from the RXT. RXT is when it gets to this level, you should have, as a matter of fact, by the time it's getting to R3, you should be out already. By R2, you should be getting out, so the point is that some of these stocks, they're not exactly the best to buy when they are rising, but people buy anyway, so 9.65, 95% probability of it printed, extreme extension target. Then there are supports. We have 7.81. Where is it right now? Is that it has already printed that as well. It has blown through all of those. It's currently now at I just saw this now, 7.3. Okay, that's where it is. It's in between this. It's below this now, so it has already tested 7.81, 7.42. The next target will be, next downward projection, 7.02 for 45% probability. Mean reversion target. Okay, 6.67. Capitulation zone if breakdown occurs. Okay, so the most probable range is between 7.42 and 8.51, which is where it is right now, and 65% probability of it trading within this grid over the next 5 sessions. Yeah, it's already there now. Short-term trade setup. This is not a recommendation for anyone to get involved with. This has a mean reversion, okay, and your target will be 7.42. Some of those targets, they've already passed now. Yeah, they've already passed. Yeah, as things stand right now, already passed. Rationale is this because it's at a 96.8% premium to its 200 period moving average. Okay, it is an extreme premium. Okay. Price pressure momentum 1, derivative declining, so just momentum exhaustion. Okay, yeah, long-term setup. Okay, entry zone $4 to $4.7, and your stop loss will be 3.5. Target will be 6.5. Second target will be $8, and the third target 9.3. Probability of success is 62%. Okay, rationale is that the 200 period moving average is in trend mode, not maintenance mode. Stable longer term base building around $4. Okay, so the extrapolation of its 40 period moving average forecasts a 4.11. For a forecast at 4.11 aligns with the 40 period moving average and the 200 period moving average cluster. Mean reversion from current extremes suggests a $4 to $5 zone will be revisited. After digestion, PPM1 and PPM2 can retest and support next leg higher. Okay. Risk factors. Catalysts are known. Yeah, catalysts are known. Low float risk. Okay, yeah. Is it a low float? I think so. No pivot structure. Lack of established pivot highs / lows, immature technical setup. Frost target, I think there's a projection at 3.04, suggests algo downside projection of 61% from current price. Okay, recommended approach: favor mean reversion short term, then accumulate long term on weakness near 4.5 $4 to $5 zone with a defined risk. So see what you make of all of these, and thank you very much for watching this video.